Welcome to On the Chain. This is Chip. Jeff's not here tonight. Hopefully, he'll be back with us tomorrow. So, tonight, a lot of cool things to dig into. First off, want to jump into the whole media circus that's happening around the Gary Gensler testimony before the Senate Banking Committee yesterday. The media's weighing in, and it's really good to see that there's some strong reporting and some no BS, let's put it that way, no BS in a sense that the reporters are really doing some responsible reporting. And I have to say that it's refreshing for a change. Also, OpenSea, looks like they might have been caught with their hand in the cookie jar. Something weird going on over there. Want to jump into Solana and want to talk about crypto investments. But first up, we're going to talk about some XRP news and jump into that as well. So here we go. If you guys are ready to get started, why don't we get this puppy going? Let's go.
Welcome to On the Chain.
And welcome to On the Chain. As she said, welcome everybody. As you guys are starting to pile in here, give you guys a little bit of time to sort of like assemble, jump in here. But while you're doing that, drop where you're from, the country and the city. Again, Jeff and I always love reviewing this. We love seeing where everyone's coming in. If you're watching the playback, drop it in the comment. Love to see where everyone's coming in from. So wanted to just kind of start off on like one of these notes tonight, but there was a really well penned article tonight or today, I should say, that that always gives you a little bit of hope, because it's always nice when somebody can chime in on something and enter their expert sort of opinion. And it's kind of one that I really agree with. But before we get to that, let's go ahead in there. I want to start off with this John Deaton tweet, because I find this to be somewhat interesting in this whole arena of what's going on with this with the SEC, right? So John, as always, puts out amazing tweets. He said, the SEC is withholding Valerie Sirpanik's notes from Hinman's December 13, 2017 meeting with, and this is Joe, I believe this is Joe Lubin right here. Yep, Joe Lubin from Consensus. So they apparently met not only with Joe, but also with Consensus. And the SEC is withholding Sirpanik's notes related to her March 2018 call with, again, who? Consensus, right? That's the Joe Lubin organization. And it's also withholding attorney Michael Seaman's notes. And then he gets into Seaman was at two separate meetings. Take a guess which company. That's right. Consensus. You guys starting to see a little bit of a theme going on here? Consensus met with the SEC in addition to December 13, 2017 and March 2018, again on April 23rd, 2018, again on June 8th, 2018. And that was just 6 days before the Bill Hinman June 14, 2018 Yahoo speech, where he sort of, again, was it a personal opinion, but he apparently gave a pass to ETH and not being a security, despite the fact that it was raised, the money raised happened from an ICO, essentially. And then Joe Lubin and Consensus spent a lot of time with the SEC. Keep in mind that this is just what we're able to piece together from redacted and incomplete depositions and letter motions. From December 2017 to June 8th, 2018, we know of four separate meetings that actually transpired. So I guarantee you that there's more contact than these 4 meetings. That doesn't include emails, text messages, other phone or Zoom calls. Earlier today, this is Digital Asset Buy, which is the digital asset investor, dropped by the Gasparino video and tweet related to the Brooklyn project, which was Consensus and Joe Lubin. And again, this is, he just basically tweeted out a video. Charles Gasparino of the Fox Business Network, which we're going to jump into pretty extensively tonight, because I got to tell you, this guy is on the ball. He's picking up this story and he's running with it in a very responsible manner, exactly the way we would like to run with it ourselves here on the chain. So Charles Gasparino was told that they were working on with the SEC and the CFTC to create self-regulated entities sanctioned by the SEC and the CFTC. The SEC is withholding notes related to 3 separate meetings with the CFTC. All right, so this is obviously a pattern, right? And again, if you notice in the filings with the court, the mirror review, they said that, or the camera review, I should say, they said that everything's privileged. Everything's privileged. Every single piece of conversation, notes, emails, whatever it may be, is apparently all completely 100% forbidden, right? From the breaking eye. So, all right, let me throw this one up here. Let me get back over here. This is Charles Gasparino right here. He says, breaking through an organization known as the Brooklyn Project. Blockchain crypto business seeks to create the first self-regulatory organization sanctioned by the SEC. More now at Fox Business. So we're going to jump into some more of his tweets. We'll jump into that in a little bit. But it's amazing that all of these, everything's so protected and buttoned up and locked up at the SEC. It's incredible to me that there's nothing that anybody can get their hands on. Right now, I want to jump into this positive story right here because this is an interesting one, especially given who is doing the talking right here. So here we go. Let's go. So we've got right here. We've got so Goldman Sachs expert, Ripple has the potential to change the world. This article came out today, as a matter of fact, and this is an interesting article. So a former Goldman Sachs expert named Andrew Lokanath believes that Ripple is going to change the financial world. Not too dissimilar to what we believe here, and we believed all along, those of us that have invested in XRP. So as a public currency, Andrew Lokanath says that XRP could become very big once the Ripple Foundation is able to resolve its issue. Ripple Labs, actually, not the foundation. You think he might be confusing that, or at least the writer's confusing that with the Stellar Foundation. But once Ripple's able to resolve its issues with the Securities and Exchange Commission, Lokanath said that he's held various positions at Goldman Sachs, AIG, and other major financial institutions. The expert said the following about the XRP token. Ripple will redefine online payments, and I believe Ripple will likely go public once the SEC lawsuit is resolved. The main advantages of using the Ripple protocol are speed and reduced risk. XRP is a replacement for Swift, which is expensive and slow. And despite the fact that you've probably seen a lot of press out there, Swift is really trying to, lift themselves up and how they're coming along and they've got instant transactions. Well, the settlement still is not happening. And that's really one of the greatest things that Ripple has built, which is the on-demand liquidity, getting rid of those Nostra Vostra accounts. And this is one of the things, I don't care what Swift does or what a lot of these institutions out there, there's a lot more magic going on with that on-demand liquidity product. And that's one, and not only that, but the bridge loans and everything else that the Ripple's been working on. So let's segue back over here. And he explained that Swift is a 50-year-old interbank settlement system that controls the flow of funds across borders. Fiat currency takes about 3 to 5 days to transfer from one country to another. And Ripple's XRP takes roughly about 5 seconds. Yeah, it keeps going up. Do you guys notice that? It's like 3 to 4 seconds. Now it's 3 to 5. Now it's 5 seconds. It doesn't matter. It's pretty lickety split. And he says, the future of XRP, the Ripple protocol can thus provide much faster, cheaper infrastructure for interbank payments. It provides financial institutions and businesses with a fast and efficient mechanism to move money around the world. And that really is the magic of what they do. And this is where the SEC has it so wrong. They quite honestly don't understand what it takes to lay down the rails. And Ripple is a software provider. Let's make no mistake about that. They build software. The software allows, it happens to run on, the XRPL. It runs also on utilizing the digital asset XRP. But it's core performance, and really what Ripple does is build the software that allows it to move and allows it to do these types of things. He further said the following: Ripple is backed by Japanese financial services firm SBI Holdings, Spanish bank Santander, but also by leading venture capital firms including Andreessen Horowitz, which Andreessen Horowitz is making huge moves. Something we'll probably jump into in a little bit later in the broadcast. But Andreessen Horowitz is like right at the top. if you know this organization, they were one of the very first to basically invest in Ripple, the company. Okay. And Lightspeed, and Peter Thiel's founder fund. So you're dealing with big players here. These are people who are in the know and know a little bit more than most. Expert thinks far ahead. He envisions a scenario where the Swift banking protocol will finally meet a match in the field of blockchain. Ripple has a unique position because it's well placed in the cryptocurrency world and the fiat world. Ripple is unique. Its unique selling point is its cross-border payment in countries where it takes days to transfer a payment as low as $2,000. Loganov therefore believes that the future of banking is headed in the same direction as Ripple has set its standard. It's preparing for a new era. And it's nice to see somebody from Goldman Sachs sort of weigh in and, give their expert opinion about this. And I don't think it's anything dissimilar to what we believe too. But again, it's another voice out there who is really extolling the virtues of not only what Ripple does, but also the digital asset XRP. So that's really awesome. That's good stuff to see as well. Let me jump into something else here. Let's go into, I wanted to play, and by the way, I want to thank James Rule XRP for sending Jeff and I that story about the Goldman Sachs expert. I want to play this video here because I think this speaks very loudly. It's going to take me a second to cue it up because there's probably going to be an ad in it or two. So give me 1 second, but let's see if I can, I'm going to have to. Okay, good. Looks like it's gonna play. So this was Squawk Box. If you guys know Squawk Box, it's on CNBC. CNBC is a business network here in the U.S. and it's an interview between Pat Toomey, and Pat Toomey was he's the lead ranking member of the Senate Banking Committee, and he was lucky enough to interview Gensler a little bit yesterday. But I got to go ahead and share this so that you guys can actually hear the sound here. And let's do this. All right. And if you guys don't hear the sound, and you guys go crazy in the chat, because I don't have Jeff to tell me that you guys can't hear it. But I'm going to go ahead and I'm going to play this. But I want to say this. I want to play this. I want you to listen very carefully in the very beginning of this, because Pat Toomey lays out some really good, strong arguments. So let's listen in, and then we'll jump back and comment here. Let's see, is the sound all the way up? Yes, it is.
MIT educator, former Gary Gensler is a very serious guy on these matters. MIT educator, former professor on some of these things, was teaching classes on this. You're very serious about these issues too, and yet you don't see eye to eye with some of these issues. You're both people I take seriously, though. What do you fault Gary Gensler on when it comes to some of these things?
Yeah, so if you listen to the exchange that I had with Chairman Gensler yesterday, a big part of it was the fact that the SEC has not laid out clear guidelines on what kinds of cryptocurrencies they view as securities, right? Their regulatory regime is limited to securities and platforms that trade securities. Well, if cryptocurrencies, or at least certain cryptocurrencies, are not securities, then the SEC doesn't currently have legislative authority to regulate them. Now, maybe you can make a case that we ought to change that. We can have that conversation. But here's what concerns me. Chairman Gensler will acknowledge that, say, Bitcoin and Ethereum certainly are not securities. Certainly, they look more like commodities. He'll acknowledge that. But then he'll say that stablecoins pretty much are securities. But if you ask me, they don't actually meet the test, the legal test for what constitutes a security. So I'm just asking the SEC to provide some clarity. Let us know. Why do you think this is a security? What are the characteristics of a cryptocurrency that make it a security, so that people will know, and then let the laws, enforce the laws.
Now, I want to jump into this a little bit, because what he's talking about here is the fact that, and brilliantly so, it's like, wait a minute, if you're going to sit there and you're going to say it's super clear, well, why don't you tell us? Enlighten us all. Come on, Mr. Chairman Gensler, tell us exactly why, exactly why it's a security. Now, if you remember that exchange between Elizabeth Warren and Chairman Gensler, that political theater that was absolutely just insane. One of the things he said is, the Coinbase didn't come in and register with us. They should have come in, and they absolutely should have registered with us, because a lot of their A lot of the coins that they sell on their exchange are securities. Well, that's great. But if you don't have the clarity to distinguish the difference between them, and another problem that I find with the SEC is they just do not understand what digital assets are. They don't understand blockchain. They don't understand a decentralized asset, something even like an XRP, or it doesn't matter what it is. Most of them are not securities. If they're not securities, Pat Toomey is right to assume that if they're not securities, why is the SEC even messing around with it? It has no jurisdiction because it doesn't regulate the a non-security, which is exactly what we find in a digital asset, a decentralized asset. Okay, I'll put some more of this up here.
Maybe we need to make some changes. I'm not in the camp that thinks that there should never be any kind of regulation over any cryptocurrency. That's not my position at all. But I do think there needs to be transparency and objectivity about what we're doing here. And the SEC is taking enforcement actions without first having laid out how they interpret, how they apply existing securities law to this really, really important and innovative new category of finance.
Innovative it is, and it's been hard for the regulators to keep up. You understand.
Now, this is where I find fault, tremendous fault with the, I was praising and extolling the virtues of what some of the reporting that's happening out there with regard to the press. But this, she's like, oh, the regulators, they had such a hard time keeping up. It's their job. They're so overstaffed. It's pathetic. So I disagree with where she's coming from on this.
And that, it often is hard for regulators to keep up with the pace.
Oh, woe is me. It's so hard for them. No, it's not hard for them. It's hard for them when they don't know what they're doing, which is 90% of what we're seeing out there today.
He makes a point in saying it's the wild, wild west out there. I mean, we saw earlier this week the Litecoin situation, that fake release that went out and said that Walmart was going to start accepting it. And it does make you look at this and say, hey, maybe there is some regulatory oversight that's needed, and maybe it'll take a little too long. I can kind of see him laying down his place markers as a way to get to just a signal that, hey, there's something coming, so you better sit up and pay a little more attention.
Yeah, look, I think it is a little bit of the Wild West, and there's no doubt some of these projects are going to end badly. There's some of these projects are offering returns that don't make sense to me. It's hard for me to imagine how they are sustainable. All of that, I think, is true. But I think it's also the case that the SEC owes Americans generally, and certainly everybody in this space, the transparency of saying, here's how we're looking at this. Here's why we think this category is a security, and we're going to regulate it as such. These are not securities, and they have to either be unregulated or regulated somewhere else. You know, the cash market for commodities are not federally regulated. CFTC regulates futures. The SEC regulates securities. Of course, we have multiple bank regulators. But, we've got to sort this out, and we ought to have transparency before we go with enforcement.
That's it. Transparency rather than before we go with enforcement. And that is extremely well said right there. And I think Pat Toomey did a really nice job there of sort of outlining his position and explaining exactly where what it comes down to. And what he's pointing to the hypocrisy of the SEC is that they're the ones doing all the enforcing. They don't have anything to lay their hat on. They don't have there's no clarity. So if there's no clarity, and they don't have the ability to bring it because they don't make the laws. You know, the legislators in Congress make the laws. You got the House, you have the Senate. That's what makes the actual law. They're supposed to go ahead and enforce the law. But all they're doing these days is nonstop enforcement. And I got a video that I want to queue up here just to kind of show exactly what the SEC is about. Because, you know, when you think about the SEC and their enforcement action, look at this right here. So Gensler put this video out today, right? Is it a happy video about how we really want entrepreneurs to thrive in the United States and we really want to see projects go through? No, it's none of that at all. Let's listen in on here. Let's listen to Gensler bloviate even more. It's really Gensler the enforcer, or as Jeff likes to say, Gensler the nose. Let's listen in.
We just hit a milestone. A total of $1 billion has been awarded to whistleblowers as part of our whistleblower program at the
So what is this whole video about? The whistleblower program. You too can blow in your fellow colleagues and you could get them, arrested or do whatever. This is just more of the same garbage, the Gary Gensler enforcement message that you can join the whistleblower program. Let's listen in.
Securities and Exchange Commission. The SEC has paid out $1,074,010,519.76 to 207 individuals through the program. And every single one of these whistleblowers has provided an important public service. When I see the Commission's enforcement actions each week, I am reminded how the whistleblower program helps us to be better cops on the beat, execute our mission, and protect investors from misconduct. The tips, complaints, and referrals that whistleblowers provide are among the most powerful weapons in the law enforcement of the SEC. A whistleblower's knowledge of circumstances or individuals involved can help the SEC identify possible violations much easier than might otherwise be possible. This allows the Commission to minimize harm.
Okay, that's enough of that. It's just a lot more of the same. But what it gets down to is the fact that Gensler is making his mark. What's he doing? He's encouraging other people to blow the whistle, right? Blow the whistle. I'd like to blow the whistle on Gary Gensler and call him a fraud that he is, because he's not looking out for retail investors. He doesn't have the clarity. He keeps pushing this narrative of clarity. And the only thing he hangs his hat on is this investment contract, where based on the efforts of others, there's a promise that, or an implied promise that there would be some sort of a incentive or a profit derived from that. Organic Flood, what's up? Thank you for that. He says fiat plus XRP equals CBDC. So fiat plus XRP equals CBDC. Huh, that's interesting. That's an interesting one right there. And then Jay says here, he says the SEC are the cops that hide behind the bushes to catch speeders and rig the speed guns to try to give super speeders tickets. Yeah, it kind of looks that way. It kind of looks like it's all sort of hedged against against us, right? I mean, that's a good observation there, Jay, without a doubt. And then Tony Morissette says, is it fair to say that the XRP can be both a security and a commodity / currency depending on how you purchased it? Like if you bought it from an exchange using it for ODL versus buying it from a broker dealer, I don't see any instance where sorry, I got the fan blowing on me over here, but I don't see any instance necessarily where it could be a security. Now, if you look back in the history of Ripple, you might be able to allege that at the time, because the validator nodes were not decentralized 100%, and certainly Ripple controlled more than 50% of them, you could make that argument that it potentially was somewhat of a security. But I don't necessarily, it matters where you buy it, whether you buy it on a secondary market, a broker market, an exchange. The fact is that the XRP, the digital asset, is completely decentralized. And I don't think there's any sort of dispute with that. But I do see that depending on, you could potentially package XRP, and there's certain things you could do with it where it could have the appearance of a security. So I will give you that. I just don't see it, the digital asset itself these days, at least in the last couple, I'd say 3 to 5 years, that it's that's completely decentralized. Now I want to talk about one thing where this is what the SEC ought to be doing right here. Let me go ahead and share this, because this right here is fraud, and this is something where the SEC should focus on. So the SEC charged App Annie with securities fraud and a $10 million settlement. Now, if you guys don't know App Annie, it's used by app developers, mostly on Android and iOS. And what it is what they do is they put out data about how many downloads, how many average downloads, how many users, all this kind of stuff. And this particular one is what the SEC should be focusing its time on. They announced Tuesday it's charging App Annie, the mobile app provider, with securities fraud accusing the company of engaging in deceptive practices, misrepresenting origins of data. So when you're talking about origins of the data, this is user data, and they misrepresented it. Okay, so this does defraud the end user. And according to the SEC, the company sells estimates on app downloads, usage, and revenue. And it was supposed to be done only in an anonymized way to run through an algorithm to generate performance estimate. But the SEC accuses App Annie and its former CEO and chairman of reneging on that promise. Okay, so basically going against what they said they were doing with the data versus what they were supposed to do with the data. So here App Annie and Schmidt lied to companies about how their confidential data was being used. And not only that, but they sold the manipulated estimates to trading firm customers. Oh, Notorious is here, man. Notorious. Beautiful video you put out earlier, and thank you for the heads up on that video, because I played it a little bit earlier. But thanks, man. I didn't know I was gonna play your version of it, but I didn't know if I should, just because of the because I didn't have the clearance. So, but anyway, thank you for that super sticker. And this is exactly what the SEC should focus on, right? Elements of fraud, misrepresentation of data, using user data that was supposed to be anonymized, but it wasn't anonymized. And App Annie is now claiming they've made a number of material changes in recent years. They appointed a new CEO, blah, blah, blah. But again, this is where those enforcement actions, where I can see that the SEC is doing its job, right? Because we don't want people defrauded thinking that the data that's being taken from companies and utilized and supposedly randomized, and it's not randomized at all. And then on top of it, they're selling it off to somebody else. That right there is fraud. And that's really what the SEC should spend more of its attention and time on. So I thought that was an interesting play right there. I wanted to jump back into Charles Gasparino. He put out some amazing tweets today. There we go. Let's start with this. Let's start with this one right over here. And let's go ahead and share the screen. You always got to jump through 17 clicks to do this. There we go. So, all right. So this is interesting right here. So Charles Gasparino, the Fox Business Network, breaking. SEC enforcement tells Fox Business that the logic of the agency's case versus Ripple is that the company's infrastructure is still being built out. So XRP, the token which was used to finance the thing, is considered a security. This is absolutely insanity. What the hell are they talking about? Because they're claiming because Ripple hasn't fully built out the infrastructure. Do they have any idea what it takes to lay rails down between certain countries? Do they think this was going to be built overnight? They've been working on this for 8 years, but do they think this is, and this just shows you exactly how out of touch the SEC is. They have absolutely, they're clueless. They're the old guard. They're clueless. They have no idea. But they're saying their base logic for this, for filing the suit against Ripple, was because the company's infrastructure is still being built out. So XRP, the token which was used to finance the thing, also incorrect. That's not 100% correct either, because what was used to finance it was roughly around $300 million of private investment. You know, we talked about Andreessen and Horowitz a little bit before. We talked about a bunch of things, but there was a private investors that invested in Ripple to the tune of $300 million. Now, certainly some of the XRP may have been utilized, but so what? And what does that have to do with it? The fact is that the token is decentralized. So how can a decentralized asset be even looked at as a security? So it's considered, it says it's considered a security. Infrastructure is totally built out and has been for years, and thus it's clearly a commodity. Hester Pierce argues that all this may be the case, but the SEC splits hairs. Crypto innovations being stifled. So what's needed is a safe harbor that pulls back this enforcement action. And what he's referring to there is Hester Pierce's brilliant plan of the safe harbor, which gives a company 3 years to basically start building, come out of the blocks, and decentralize within a period of 3 years. And this is exactly what is necessary. And, you know, and sadly enough, Hester Pierce has been blown off. I don't know why. She's been totally ousted for whatever reason. And then here's another great comment by Crypto Eddie. She says, you have to lay the payment rails first, which then caters to a demand, followed by market makers and exchanges secured to help facilitate the on-demand liquidity flow. It's not like you just flip a switch. And she's absolutely 100% right. The SEC clearly does not understand the business. They do not understand the business. And this is one of the chief, everything's like the Howey test, the Howey test, the Howey test, a promise of an investment contract. It's like a broken record. It's like constantly just, it's like parroting the same thing over and over again. They go to the old well every single time. I put out there, Gensler doesn't understand much outside of enforcement. They don't venture out further than enforcement. I mean, that's about as far as they go, really. I mean, there's not a lot going on inside of the SEC's head at this moment in time. So I wanted to, again, Gasparino, we're going to look at a number of his tweets tonight because he put out some very good ones. And okay, so here we go right here. Look at this. So he says, as I do reporting on Ripple case and the SEC Gov's definition of what is or what isn't a security, I find that statements that Gary Gensler, wait a minute, hang on a second. Sorry, I got confused. I'm looking at two screens here. As I do my reporting on Ripple case and the SEC's definition of what is or what isn't a security, I find that Gary Gensler, or at least according to past statements, is even more draconian than Jay Clayton. He suggests Ethereum is a security. Try putting that one back in the bottle. So, I'm not sure he meant Ethereum, but maybe he meant to say XRP or something along the lines of that there. But yeah, he's actually more draconian than Jay Clayton. He makes Jay Clayton look like a choir boy, right? Jay Clayton's like was the savior of the SEC compared to the enforcer, the nose. Gary the Nose Gensler, who is nothing but enforcement, so much so that he's got to be putting out videos, talking about it. So, I mean, it's incredible stuff that he's doing right here. Here's another great tweet by Charles Gasparino. All right, so this is another one here he put out. He said, hey, breaking. Something crypto mom Hester Pierce recently told me, and it rings very true. Without consistent regulations on cryptocurrencies, the SEC will stifle innovation in the US, and innovation will move elsewhere, as it's already been doing. It's been doing this for years. It's just that nobody's picking up on it. In my humble opinion, maybe that's what the government's end game is, to kill the business. So now you got a top-notch reporter who's potentially summarizing or at least hypothesizing that maybe the government's end game is to kill the business. But guess what? You can't. And you know what? The rest of the world doesn't care. So it's the U.S. It's all on the U.S. itself, and none of that really is going to matter too much. I mean, when it comes down to it. So again, I mean, he was on fire today, so I wanted to jump into all of these because they're really strong ideas. And again, this is a business figure on Fox Business News who's taking a responsible advocation to reporting on this. He says what may need to happen with crypto regulations is a creation of a new separate regulatory agency. It's too much of a gray area now. And then the SEC is regulating through enforcement, which is always opaque. It's turning out to be more like insider trading, which is defined based on who is running the government. And that's a really good observation right there as well. But, it almost does warrant its own creation of a new regulatory agency, because the SEC is not going to enforce anything, because we don't believe that digital assets are securities. So they're out of their jurisdiction. The CFTC, a little bit different in nature and what they regulate. It really does need its own sort of regulatory body that can sort of specialize 100%, I would say, at least as it pertains to cryptocurrency. And I think that probably would be the best way forward. And then he throws this out. I mean, he was on fire today, man. He was on fire. Maybe someone can answer the basic question. What's the real difference between XRP and Ethereum? I get that the SEC is saying that Ripple was financed by XRP, but wasn't Ethereum financed through an ICO? Boom! Here is somebody from outside who is a talking head on a business network who just was able to put it together so beautifully. Hey, what's the difference between XRP and Ethereum? You know, the SEC saying Ripple was financed by XRP. Wasn't Ethereum wasn't financed through an ICO? Yeah, pretty much. So again, here we go. You know, we see somebody like Gasparino who's doing a very solid job of reporting the facts. And how great and refreshing is it to see XRP in the mainstream media? They're talking about it. They don't flash it on the screen for 7 seconds and call it Ripple. No, they're actually talking about the comparison. If you're going to sit there and call Ethereum, which was financed through, well, it was a coin offering that lasted about a year, July of 2014 to July of 2015. It was pre-sold. Bottom line, looks an awful lot like an ICO. What's the difference between XRP? XRP early days too. You could say the same thing, but both of them, we can agree on this, is the fact that both Ethereum and XRP became decentralized assets. And if you can't see the same way Ethereum, which started out as an ICO, became decentralized, then you are very sorely missing. And this is the problem I have with the whole case of the SEC against Ripple, is the fact that it did become decentralized over time, and especially with the validator nodes and the way that works. You know, it's a different network, and this is what we're going to talk a little bit about Solana, where Solana, I believe, is in a lot of hot water and trouble right now, just because if their devs can spin up and stop the validator nodes, that's never going to happen with the XRPL, because these validator nodes are distributed, and if there's one bad one, you can lock it down and you can basically just ignore it, and it's a consensus sort of a protocol. So I just thought that was a beautiful one right there. And then Tom Emmer weighed in too. Tom Emmer got this amazing tweet in here. And Tom Emmer, as you guys know, is a champion for not only blockchain, but, you know, digital assets in general. And he's a congressman out of Minnesota's 6th district. But this is another observation that was interesting. It's sort of something that came out of the hearing yesterday. But he says, hey, is Gary Gensler actually attempting to assume authority over stable coins by rebranding them stable value coins? It's a good observation. And this is one of the things that I disagree with in that hearing yesterday, where, and I believe it was Pat Toomey that was making the comment saying, well, if it's pegged to $1 and the value doesn't change, where's the promise of an investment contract? Where is it based on the production of others that's actually you're going to realize some sort of a value increase? How much a value increase are going to be? If anything, due to inflation, this stuff's worth less and less, right? If it's pegged to $1, it doesn't matter if it's a digital representation, you know, in the form of a stable coin. But you know, Emmer's pulling out something really key here by saying, hey, it almost seems like Gensler's trying to rebrand it as a stable value coin. So then he can say, you see, it's a security and you got to come in and register with us. I mean, you might get a Wells notice, which is a future promise of an enforcement action. But this is something that I thought that Tom Emmer beautifully nailed that, and a very strong observation right there. Let's see. Let me see what else we got here. All right, I want to go into this too. We covered this a little bit last night, but I think it's worth hitting again. Let's do this. And again, this comes back to what Brad Garlinghouse had said. Garlinghouse tweeted against Gensler. He took to Twitter to highlight Gensler's argument, stating the current security laws are comprehensible. They're tangible for the crypto community. Garlinghouse further added Gensler's contradicting position, where he suggested that Congress further needs to write laws to clarify. Right? So I don't know if that tweet's probably not going to load. Terrific. Anyway, Gensler brings up Coinbase. Gensler brought up Coinbase in the testimony, noticing that the exchange had failed to register with the Wall Street regulator as of now. He further speculated, and the funny part about it is that when they went public via the SEC, right? So he's now ranking all over Coinbase, saying that they didn't come in and register. Coinbase reportedly is on the verge of potential lawsuit with the U.S. Securities and Exchange Commission for their unreleased lending product, right? You can basically do it inside of Aave, whatever, AAVE, on the Ethereum network, and that's okay, you know, because I guess Ethereum got a pass. But oh no, Coinbase can't do that. Coinbase can't have the same sort of, you know, opportunity to do that. No, they're going to get some sort of a an infraction or a Wells notice or something along the lines of that. And I want to play this video too, and this is a good one. This is Perianne, who's from the Digital Chamber of Congress. Here, let me stop this. Let me go ahead and load up this video here. But I thought she makes some key points here too. Here we go.
What would you?
Here we go.
If you could advise the SEC chairman, Perianne, how would you like to see this done? What is to satisfy all the constituents here?
I think sorry, go ahead.
Yeah. We need clear and predictable guidance. Chair Gensler has stated multiple times that he believes the law is clear. That is not true. We represent over 200 businesses that are innovating with digital assets at the Chamber of Digital Commerce, and I have yet to have one company say, yeah, we understand what the rules to the road are. In addition to that, we represent about 40 different law firms that are practicing in this space, former SEC officials in these firms advising companies who also say the rules to the road are not clear. And at the end of the day, there is a brain drain. This is the most innovative and fastest growing industry in the world today, and we are driving that overseas. And that really needs to be taken into account in the public policy process. What is the opportunity of losing business due to not having clear and predictable regulations? And it's not just me that's saying this. Commissioner Peirce, who's also an SEC commissioner, has stated this over and over again. She's put forward a safe harbor for digital tokens. The SEC has not taken it up for rulemaking. We urge them to do that. And then there's about 30 different members of Congress over the past 4 years, this isn't a new issue, have either sponsored or co-sponsored legislation to fix this issue. There's about a half a dozen pieces of legislation that looks to clarify when a token is a security. There's HR 1602, the Eliminate Barriers to Innovation Act, Congressman Tom Emmer's Securities Clarity Act, the Token Taxonomy Act. Again, we need clear rules to the road now.
Yeah, but
yeah, so there you go. That was Perianne, and she puts it all in there. I mean, she puts it all out there. She gets it all in there, which I really love. And she's like, yeah, nobody's sitting around going, gosh, there's so much clarity. What do we do? And Hester Peirce, you know, she totally rightfully talks about and brings up the safe harbor, which we talked a little bit about before. And then she starts like rattling off some of the bills. Tom Emmer's bill. We got the token taxonomy bill, you know, Warren Davidson's bill, you know, with Darren Soto. And one of the key differentiators here that I see is that back in the 90s, when in the United States, when the internet was just starting to get going, people didn't really quite understand it. 95, 96, people are like, oh, the internet is going to revolutionize the world and change. Now, one of the things we had back then is you had a Democrat president in the name of Bill Clinton with a Republican Congress. Republicans controlled Congress, and together they were able to come together. And one of the things that they realized right off the bat was the innovation that was the internet, the opportunity that there was to build upon and have companies grow into this new sort of like segment that had never been really around before, is brand new. And one of the things that they made a conscious decision on early is not taxing the internet, right? Don't tax it. Let's not tax the stuff that was bought on it. I mean, of course, later on, all this stuff sort of trickled down. And yeah, you know how that works. That's how government works. But early days, they saw the growth potential. They saw the innovators. They saw an opportunity to how this could potentially grow. Now let's fast forward to today. You got a geriatric person who's not fit for the White House and a Democratic president who is just out of touch, and then you've got Congress, which is pretty much run by the Democrats. So they got carte blanche. If they wanted to, they could easily come in and say, hey, let's enact some legislation. Let's dust off one of these bills, and let's go ahead and let's put it to task, and let's get it going. But they have no interest in that. You know why? Because they don't care. They're more interested in lining their pockets with these so-called infrastructure bills and all this other stuff. But if you follow the money, you can follow it pretty closely that it lines up pretty well with their bank account, their family's bank's accounts, their friends, all their friends that help them get to the high places and all that. And that's a really sad story today, is where you have the opportunity for bipartisanship, where people came together, and a lot of these bills were authored by both sides of the aisle. And so when you see stuff like that, it is a little bit disheartening on many levels, which unfortunately I actually hate to see. And then, you know, Jay said, Jay, you had a comment here, I saw your comment earlier. It said, didn't the SEC have to didn't Coinbase have to register with the SEC? Yes, they did. They absolutely did have to register with the SEC. And I think I have another video here queued up here. There's so many great videos today, man. It was really good stuff. I don't know if I want to play that one. Never mind. I'm gonna kind of pass on that one for now. Let's go to another tweet here that we had queued up. That's not it. Okay, so here we go. Oh my gosh, sorry guys. I'm trying to go through this here. Let's jump over to let's go jump over to the Solana story. I want to jump onto this a little bit because I think this is important to talk about. So Solana's mainnet, as you guys know, it went down. The validators went down, caused a whole bunch of ruckus on the network, and consequently, people were not happy. So Solana's mainnet is back up. Here's what happened. Solana's network bullish momentum came to an abrupt halt after the mainnet beta experienced this transactional glitch. So really, what was this glitch, right? There was some sort of a glitch that happened. What was this glitch? The transactions flooded the transaction queue, but the absence of prioritization of the network critical messaging led to a fork in the network, which in turn consumed a ton of memory on the network. Several nodes in the blockchain went off due to excessive memory use, and then the network remained inactive for more than 10 hours. Now, let's analyze that. 10 hours. Are you crazy? This is insane. It shouldn't have gone more than down for 10 minutes, but it was basically offline for more than 10 hours. The developer team claimed they'd been working to bring the network back. So they basically toiled for, you're talking about 10 hours, and were unable to bring it back. The transactional bug at the peak of Solana's bull run dampened its chances of extending its bull run to new highs. Even many highlighted that the network was quite centralized. Okay. Quite centralized. Alex, thanks, man. I just got your message. You just hit me up. Pointed out last week, and it would only take about 20 validators to come down and shut down the network. Solana became the biggest success story post-May market crash, as the altcoin saw a 7 times increase in price since August. It entered price discovery mode after breaching the $100 market, or the $100 mark, and to find all market trends, to post a new all-time high of $215. And I kind of imagine that XRP is not too long behind this. Once all this stuff, we get through a lot of this. But the whole idea that this could go down for this long a time is absolutely insanity personified. And it speaks largely to the network itself and how decentralized is it if the developers can start and stop nodes and have that kind of ultimate control over what's happening on the network. So I just thought that right there was absolutely just a total misnomer, and sad to see stuff like that happen. Then I saw this story right here. This is an interesting one. You guys know the popularity of NFTs, how incredibly how incredibly popular they're becoming, right? I mean, they're buying all kinds of stuff. You basically put a name on it. People are buying words for games, or like power-ups, written white on a black background, and they're basically buying them for hundreds of thousands of dollars. There's no game, there's no power-up, but again, there's the frenzy going on. So I wanted to jump into this story because I find this fascinating. This was somebody called Zuwu TV wrote this tweet to OpenSea, and it looks like this. Hey, OpenSea, why does it appear that Nate Chastain, now Nate Chastain is a head of product over at OpenSea, the NFT exchange, Punk, so he's head of product. So this guy Zuwu is saying, hey, why does it appear that Nate Chastain has a few secret wallets that appear to buy your front page drops before they're even listed, and then sells them shortly after the front page hype spike for profits, and then tumbles them back into his main wallet with his punk on it? So this is interesting. So you got somebody hitting up OpenSea, asking him about this, and then OpenSea says this. Check this out. OpenSea confirms executive used insider knowledge when buying NFTs. The marketplace has acknowledged the head of product, Nate Chastain, purchased NFTs that he knew were going to be displayed prominently. So he had inside knowledge of this. And Chastain was accused by Twitter users overnight of snapping up items in OpenSea's front page collections ahead of the general release. Obviously a no-no, right? You're buying it before it was even released to the public. All right. Let's get rid of that. Citing transactional data on Etherscan, Twitter user Zuwu, which we just talked about, said that Chastain seems to be selling these pieces shortly after the front page hype spikes for profits. His actions may be likened to front-running or insider trading, which is in regulated financial markets, refers to the dealing on information that's not yet open to the public. OpenSea published a blog post acknowledging Chastain's actions. Yesterday, we learned one of our employees purchased items that they knew were set to display on our front page before they appeared there publicly, said OpenSea. This is incredibly disappointing. Well, hell yeah, it is. This guy just soiled your entire sort of your exchange. We want to be clear, this behavior does not represent our values as a team, although it seemed to be not a problem until somebody actually went through the steps and actually pointed it out. We're taking it very seriously, and we're conducting an immediate and thorough review of this incident, so we have a full understanding of the facts and additional steps we need to take. The company rolled out new policies specifying that team members may not buy or sell collections while they're being promoted. They cannot use confidential information to purchase or sell NFTs. So I don't know if that's a new policy or if that's just a reiterated policy. Bottom line is, it should have been some kind of policy policed internally where this would not have happened. So how it was discovered, we talks about, yeah, we kind of went into that, but Chastain was the owner of CryptoPunk 3501. He purchased for 26 Ether, about $92,000 some 7 months ago. Since this entity identified as Ethereum address, it was relatively simple for observers to watch his transactions and know he was behind it. So he kind of gave himself up. And this is the beautiful thing about the blockchain, guys. I mean, the blockchain here, guy has his, his Ether address. They were tracking him like a hawk. Anytime something made a move, anytime something hit that wallet, they knew exactly who it was. So, and especially because he was so prominent about put that CryptoPunk on his, as his avatar, then this is where you see how this stuff sort of flows to the front. And that's some good work by some Twitter users to be able to call this kind of nefarious practice out, because it really does, gaming the system is never a good thing. And ultimately it hurts everybody. So that's one of the big no's. And then again, I want to talk about it. We talked a little bit about Andreessen Horowitz early, but Andreessen Horowitz is really on the take right here. Andreessen Horowitz backed Trust Token acquires ETHWorks following the purchase. Trust Token plans to expand ETHWorks open source projects, including Waffle and USTAP. And I don't really need to get too much into this, but I want to just sort of what I wanted you to really focus on here is the fact that that trust token was backed by Andreessen Horowitz. You got Sam Bankman-Fried's Alameda Research. That's the guy behind FTX. And they put its recent funding round at a $12.5 million towards the ETHWorks acquisition. So what I think is really outstanding here is the fact that Andreessen Horowitz, an early investor in Ripple, and Sam Bankman-Fried's Alameda Research, they're making moves, right? They're starting to see, and they're snapping up the innovation of the innovators in what they're doing, and this is really the heart of what we're talking about here. We talk about this whole SEC stuff; it's long-lasting of potential effect on the crypto space, but it doesn't stop the innovators from innovating, building, moving, shifting, elevating, doing all of this stuff. And you got known entities like Andreessen Horowitz and Alameda Research that is just going head over toe, can't wait to make the investment, can't wait to make the acquisitions. And that's something that I think is an incredibly strong thing. So, and then one last thing here, we're going to end with Kevin O'Leary. If you guys know him from Shark Tank, he's known as Mr. Wonderful on Shark Tank. I think that's self-anointed, but he says he slams Ethereum's speed, touts $1 trillion opportunity in Bitcoin, and calls U.S. regulation in a new interview. Here's the best 8 quotes. So he says, I find Ethereum as a user, it's too slow. And there's going to be other chains that are going to emerge. And I kind of agree with him there. He says, I don't want to get involved in crypto if the regulator says it's not okay. I can't afford to be off sides. I can't afford to not be non-compliant. So if a guy like Kevin O'Leary, world-class investor, can't be off sides, then what's going to happen to the rest of the people sitting on the sidelines? Look at the trillions of dollars sitting on the sidelines right now because they're waiting and itching to get in because of regulation, mostly in the United States. Regulators have pushed back on the Lend product from Coinbase, and that's a slowdown. He said when the 10-year Treasury note is making less than inflation, you start to look for alternatives. And that's why stablecoins are becoming interesting. So yeah, not only stablecoins, but crypto in general. He says we want regulator to actually make some decisions about crypto because none of that are in financial services. We actually want to be cowboys about this. And again, going back to the fact that he wants to be compliant. And he says if the regulators finally allowed financial service companies to call it an asset, put it into an ETF in the United States like they have in Canada and other countries. I figured that, and by the way, Kevin O'Leary is Canadian. I figured that there'd be another $1 trillion worth of buying into Bitcoin. We don't even have that yet. But that's the opportunity on the consequences of approving a Bitcoin ETF. And this is something where speculators are saying, yeah, it could happen by the end of the year, 2022. I say don't hold your breath. I don't know when that happens. All the institutions are coming to the conference to discuss this very topic. When and how will regulators get on side? When will we consider cryptocurrencies an institutional asset class? We don't know when, but it's definitely going to come. It's not going away. And that's phenomenal. And then he finishes here. He says, I'm bullish on crypto, but also on DeFi, decentralized finance. It's not about Bitcoin anymore or Ethereum. And I love that because what Kevin O'Leary is talking about is the broader scope of the marketplace, which is just absolutely, phenomenal. And, Kevin O'Leary is a smart guy, smart investor. And I think he's really right. I think we're all bullish on crypto. It's not going anywhere. You can't stop it. You can't put that genie back in the bottle. And regardless of what people think is going to happen, I'm pretty confident that we, the people, have make our voices known, continue to make our voices known, keep pushing the buttons, keep flicking Gary Gensler in the top of the head, and let him know we don't agree with where he's coming from on any of this. And that's pretty much it. That's all I have tonight. I mean, we broadcast live here 6 days a week, 7 days a week. Wait, 6 days a week. Sunday through Thursday, 8 p.m. to 9 p.m. Eastern time. And then Jeff is back at it on Saturday mornings, 8 a.m. to 9 p.m. And I want to thank everybody for coming in here tonight and hanging with me for the entire hour. As always, we miss Jeff. I hope Jeff will be back tomorrow. It's a chance he'll be back in tomorrow. Otherwise, we'll be hanging out tomorrow night. We'll be doing more of the same. And I always appreciate you guys jumping in here. But that's all I got. This is On the Chain. I'm Chip. And I am out of here. See you guys on the next one. Chip out.
Are you down with OTC? Please like, subscribe, and click the bell to be notified when the next video drops.